Welcome, ladies and gentlemen. This is BetterTrades coach Robert Roy being brought to you by RobertRoyTrader.com. Welcome to this week's market update. Let's go ahead and take care of our disclaimer to get started off here. Basically, it says, I am not an advisor. I cannot legally tell you to buy or sell a stock. It is against the law. The SEC, which is the Securities and Exchange Commission, requires you to be licensed. I am not licensed. I don't want to be licensed. So, if you find a candidate, indicator, setup, something, anything you like here today, my suggestion is you paper trade it first before ever putting 1 penny of real money into the trade setup or indicator, and then and only then would you do so if it fits your own personal risk profile and risk tolerance. Now keep something in mind. Because I am not an advisor, that means that I am not under trading restrictions. That means that I may choose to enter or exit a trade at any given time without prior notice. All right. So let's go ahead and jump in. Now we'll start off as we always do with the S&P 500. And you can go back and watch some of the previous videos if you want to catch up on where we're at, but we've got this very long-term uptrend line that's been very much respected. We recently had a rectangle form in there. We've got this sideways motion. We're just going up and down below and above our moving averages we have in there. We broke out of that downtrend wedge that we had forming in there, and which means we put in a new high above that rectangle we had, and we even stretched up to that 20.75.76 level, right about there, not quite, before reversing back off. But we're still in that rectangle box there, so I still see that sideways motion, neutral on our bias, right, which we'll talk a little bit more about this evening in the subscribers video in the Market Insights, right? So let's go take a look at the VIX. All right, so the VIX is coming down, right? We've got those tops, which were actually, we can go ahead and redraw those tops at this point. We're going to redraw them off of, it just misses out on that other top if we do, but I've got more hits here, so we're going to focus off of those, right? So we still have the same pattern in there. We're coming down to that $16 level, which has been very key for us in the past. So let's go look at one of the symbols I'm going to be talking about this evening in the Market Insights, which I call a day in the life of the trade. Why? Because we go through the life cycle of one trade from start to finish, soup to nuts. That's how we've been able to go ahead in our non-funded account and generate 7 figures in a 12-month period of time. All right, so let's go ahead and take a look at this. Now, earnings past right here where this vertical blue line is, I'm just going to stretch Goldman out just a little bit. We made this nice move down, this nice Fibonacci move. We came back up to the 50, reversed 1, 2, 3 standard deviations. We had great profit potential in there for that one, for that setup. And then it comes back up and we close right near the 618. Now, if you're a breakout trader, right, you're just looking for the hit of that 618 and the reversal, you're taking that bearish trade. Congratulations on that. If you are more like me, a continuation trader, I'd like to see it close a little bit closer to that 618 and reverse back over. But either way, we're looking for a move down 1, 2 lines to 179.88 ultimately off of 184. So call it 184 to 180. You've got about a $4 move. Look to scale out a part of your position in the middle. And we'll go more into depth tonight on targets and where I see it going and so forth. So ladies and gentlemen, have a wonderful day. God bless. And I'll see all of you at the next update. Take care, folks. Bye.